Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, good day for markets at the moment. So, yes, we started on a flattish to mixed note today, but then look at the kind of recovery that the market has seen. And in the last 1 hour, after really jumping back from a minor dip, definitely the market is looking like it's stable in a very tight range. However, I would say that 50 points below the high point of the day at the moment, but 17,600 level conquered and stable at this point. When we really look at Sensex Nifty, both from 0.5%, there is a slight bit of dip which is being seen, and so is the case in Bank Nifty as well, now 0.45% up in trade. And the mid caps are the ones which are underperforming today, flattish in trade, but still giving a green tick. However, advanced decline ratio in favor of the declines marginally, so not a really bad day when it comes to the market strength, even though mid caps are on the flattish line. But some of the counters from some of the group companies like Bajaj Twins, SBI Twins, SBI State Bank of India being a very big heavyweight, along with HDFC Twins, these are really performing well and giving a lot of momentum to the markets today, Pavitra.
Oh, absolutely. Momentum is definitely on the upside. In fact, as we speak in the past few minutes, the mid-cap index has also moved back into the green, right? If you take a look at Nifty from the day's low, it's an over 180-point recovery that we've seen. It is clearly the financials, like Nisha was pointing out. If you take a look at the IT stocks, today they're holding up. But remember, last week we saw a 7% cut on the Nifty IT index. So this is going to be an interesting space to watch. Remember, on 22nd, you have Accenture, which will release its earnings. But more importantly, they'll release guidance, right? So that's something that we're watching out for with respect to the entire IT pack. Of course, cement is cementing gains further. So that one is looking good. And all eyes are on the FOMC meet. We will have that result out on Wednesday as well. So that is the big global cue to track. But that's what's going on with the market. We're going to keep coming back to this. First up, the cement space is in focus today. Like we told you, this is the Street Cheers Ambuja Cement's fundraising plans. Ultratech feels the heat as Gautam Adani aims to be the biggest cement player by 2030, while Nuvoco and India Cements are gaining on hopes of possible consolidation in the sector. Nigel is here to bring us up to speed on all of that. Nigel.
Well, clearly the street is reading this positively, that the promoter entity is putting in big money into Ambuja Cements, and that's why, in fact, the street is pretty happy, and that's why they're bidding up the stock. The total money that will come in post-warrant conversion will be nearly around 20,000 crores odd, and the promoter holding will go up to more than 70% in comparison to around 63% odd. The big statement that came in from Mr. Gautam Adani, he says that the company will be the largest and the most efficient cement company by 2030 odd. Remember, as of now, Ultratech Cement, that's the big daddy, and then they've already laid out a roadmap where their total capacity will go to around 155 million tons by 2025 itself. That's why Ultratech Cement, a relative underperformer, while on hopes of consolidation, the street bid up a couple of other names, like India Cements as well as Nuvoco. What are brokerages making of this? Goldman Sachs, they have a neutral rating on Ambuja Cements with target price of around 380 rupees post the recent run that they've seen. They are saying, assuming this 20,000 crores is implemented for capacity expansion, there could be a potential value upside of close to around 23 to around 47%. And they've given some scenario analysis as well that comes up for you on the screen, depending at what level and what valuation they do acquire assets, whether it's $80 per ton, $100 per ton, or around $120 per ton. And that could give some potential upside. Investec, well, they reiterate that Ambuja is their preferred play, despite higher valuations in comparison to ACC. So they've increased their target price, the highest on the street, at around 752 rupees per share. On ACC, they have downgraded it, in fact, to hold with a target price of around 2,900 rupees. The rationale they give is that Ambuja Cements is likely to be the key vehicle for Adani's cement foray. Also, they see some synergy, optionality, as well as higher growth prospects in comparison to ACC. And at some point of time, they say maybe there could be a potential merger as well. Finally, Jefferies, they have a buy rating. They have upped the target price big time on Ambuja Cements, while they have increased it to around 620 rupees odd. They've increased their EBITDA estimates by nearly around 20 to around 30% for the next few fiscals, factoring in higher volumes, factoring in higher EBITDA per ton, and they're saying synergy benefits will start flowing in post-December 2022. All this explains why the stocks were in focus. Back to you.
All right. Thanks so much, Nigel, for giving